Welcome back to Investing Talk Podcast.
Today we're looking at energy fuels.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. This company presents a fascinating case study because it sits at the intersection of two huge macro themes: nuclear energy and the domestic rare earth supply chain.
Yeah, it's a really unique position. So let's start with their core business, the foundation.
Uranium. That's what provides the fundamental stability for everything else they're doing. And the big headline here is just massive operational outperformance in 2025.
Right. If you look at their production guidance from the start of the year, they didn't just meet it.
Not even close.
It blew past it. They ended up producing over 1 million pounds of finished uranium.
That's U3O8, or yellow cake.
And they mined more than, 1.6 million pounds of ore? A lot of that coming from their Pinyon Plain mine. That kind of execution is, pretty rare.
And that operational success, it translates directly into, very clear financial visibility. We're talking about projected Q4 2025 uranium sales revenue of about $27 million.
Okay, and what does that look like on a per pound basis?
So to put that in perspective, those sales were for around 360,000 pounds. They locked in a weighted average price of almost $75 per pound.
$75? That's a very strong price right now. It shows they're really capitalizing on the strength in the nuclear fuel market.
For sure, but the real story for stability isn't just one quarter sales, it's the long-term picture.
You mean the contracts?
Exactly. They are not just playing the volatile spot market. They've gone out and secured new long-term contracts that extend all the way out to 2032.
With U.S. utilities.
With major U.S. utilities, yeah. This is absolutely critical for de-risking the company.
Right. When you have guaranteed sales and price visibility for the next 7 years.
It gives you the confidence to invest heavily in these, high-cost strategic growth projects. It really anchors the whole operation.
So that secure uranium revenue is the anchor. And that allows them to make this huge strategic pivot.
Mm-hmm.
And that pivot brings us to what everyone talks about as their main competitive advantage, their moat.
The White Mesa Mill?
In Utah.
Yes, and White Mesa is, it's genuinely unique. It is the only conventional uranium mill currently operating in the entire United States.
The only one.
The only one. So if you need to process uranium or domestically, eventually it has to go through White Mesa. But the genius here was recognizing that this infrastructure could be used for so much more.
It's really a strategic asset.
Yeah.
And they've done this fascinating pivot, repurposing the mill. It's not just for uranium anymore. It's becoming a multi-mineral processing facility.
Specifically for separating high-purity rare earth elements. REs.
And that distinction is so important. We hear the term rare earths all the time, but we should probably break down what they're actually focusing on. Because not all rare earths are created equal, right?
That's a great point. They're targeting both light and heavy rare earths. So the light ones include things like NdPr,
neodymium, and praseodymium.
Right, which are essential for strong, permanent magnets. But the real value, and frankly the geopolitical urgency, lies in the heavy rare earths, the HREs.
Okay, so why are the heavy ones so much more critical at this moment?
Because they're substantially harder to find, harder to separate, and today their supply is almost entirely controlled by China.
We're talking about things like dysprosium and terbium.
Exactly. Those are the big ones. They are absolutely critical for magnets that have to perform under high heat. So think high-end EV motors, offshore wind turbines, and maybe most importantly, advanced U.S. defense systems.
Precision-guided munitions, things like that.
Things like that. This is where their big technical achievement really comes into focus.
Right, the specific breakthrough that got the market so excited.
Absolutely. The reaction was huge when they announced they had successfully qualified dysprosium oxide at an incredible 99.9% purity.
99.9%? I mean, that's just an almost unimaginable standard for an industrial material. What does hitting that target actually mean for the U.S. supply chain?
It means they are building the very first viable domestic supply chain for heavy rare earths outside of China. This isn't just about selling a product.
No, it's geopolitical.
It's about providing geopolitical security. If the U.S. or an ally wants to build next-generation tech without relying on China for the core materials, they need a partner with this exact capability. It makes White Mesa overnight one of the most strategically important assets in the country.
It definitely elevates the whole story beyond just simple valuation metrics.
Mm-hmm.
And looking ahead, there's a pretty clear catalyst on the horizon.
There is, We should be watching for the start of terbium oxide pilot production. That's slated for Q1 2026.
And terbium is the other key heavy rare earth element.
It is. So that pilot program is the next major milestone. It's the next step in proving out their full HRE capabilities. If they can do with terbium what they did with dysprosium.
It cements their position as the leader.
As the leader in the domestic space, yes, the value of that intellectual property is just paramount.
Okay, so a pivot this ambitious takes a lot of capital.
Hmm.
Retrofitting a mill for these kinds of purity standards can't be cheap. Let's look at the balance sheet. How healthy is it?
It's robust, and that's a huge positive here. First and foremost, the company is completely debt-free.
Which is a massive advantage right now.
A massive advantage. It means they aren't vulnerable to interest rate hikes and they don't have debt covenants tying their hands. They also reported strong liquidity, about $298.5 million in working capital as of Q3 2025, and that includes $94 million in cash.
So they have the runway to fund this build-out.
They do. And if you look at how they're allocating that capital, it's very clear. There's no focus on, short-term moves like big dividends or buybacks.
All in on growth.
Every dollar is going toward accelerating growth, expanding uranium production with a target of 4 to 6 million pounds a year, and pushing that RE ramp up as fast as possible. They're prioritizing market share and strategic dominance over immediate profits.
And that prioritization leads us right to the profitability tension. We can't just gloss over this.
No, we can't.
While the revenue numbers look good, the company is still reporting persistent losses. The Zacks consensus, for instance, is for a 2025 loss of 34 cents a share, and Q3 2025 was an EPS miss. So how long can the market tolerate these losses?
That is the core risk-reward question for you as an investor. You are buying a strategic build-out, not current earnings. The hope, the thing that points to a potential 2026 turnaround, is the strength of those long-term uranium contracts.
The revenue visibility.
Right, and the low-cost nature of their mining operations. They are spending heavily now to build a massive new revenue engine, and that spending is temporarily masking the profitability of the core uranium business.
So the thesis is that the uranium side is the stable floor. It ensures they don't run out of money before the rare earth ceiling can be built.
That's it exactly. Without that uranium anchor, the debt-free status and cash would disappear pretty quickly given the scale of what they're doing at White Mesa.
Let's pivot to the market side of things, the technicals and sentiment. The market has definitely noticed this story.
It definitely has. The price action in 2025 was explosive.
Year-to-date gains of over 150%.
And then another 15% surge right into early 2026. This was driven by the whole uranium sector rallying, plus the company-specific news about the dysprosium.
And technically, that key support level, around $14.29, it's held up really well.
It's been incredibly resilient. It suggests that, bigger money sees that as a solid entry point and they're buying the dips.
And this all feeds into some really powerful macro tailwinds. The U.S. nuclear renaissance is happening. There's immense political pressure to decouple the rare earth supply chain from China.
And you just have sector rotation with money flowing into domestic producers of these critical materials.
Plus all the speculative chatter, potential Department of Defense funding, maybe some M&A activity in the uranium space.
Right. But now we absolutely have to talk about the bear case because the skepticism from traditional analysts is real.
And it starts with valuation.
It starts with valuation. The company is trading at an extreme stretch. Its forward price-to-sales ratio is a staggering 37.18.
37. And the industry average is what?
Just 4.3.
Wow. Okay, so for our listeners, what does a PS of 37 really mean in simple terms?
It means for every $1 of revenue the company makes in a year, the stock market values the company at $37. It means that massive future success is already priced in.
It's priced for the rare earth hype, not the current reality.
That's what the bears would say, yes. The market isn't waiting for the earnings. It's placing this huge premium on the strategic value of White Mesa and the potential for RE dominance.
Which means the downside risk is huge if something goes wrong.
Yeah.
Like if that terbium pilot program in Q1 doesn't hit the same purity levels.
Absolutely, the risk is magnified. Which brings us to another signal of caution. We've seen some selling from key players.
Insiders selling.
Yes, from the CEO and a director. And a large institutional holder, Azarius Capital, cut its position by over 30%. Now, the market absorbed that selling, but it's a data point. It shows that some smart money is taking profits here.
Ringing the register while the sentiment is hot.
Exactly. And finally, you just have to be ready for the volatility. The stock has a high beta, 1.89.
so it moves almost twice as much as the overall market.
Right. That's great on the way up, but it means you can see amplified, very sudden pullbacks during any kind of market downturn.
So that paints the full picture. The entire investment case really hinges on this unique dual-engine strategy. You have the strong uranium production providing a stable base.
A guaranteed baseline.
And then you have the other engine, building the sole domestic supply chain for heavy rare earths, which commands this huge geopolitical premium.
That's the whole synthesis. This is a thesis that really requires a multi-year hold. You're looking out to 2026 and beyond because the full value won't be realized until that REE business is fully commercialized. You're investing in national strategic capacity as much as you are a mining company.
What stands out here is that dual-engine approach. Guaranteed uranium revenue providing the stability, while the rare earth diversification provides the massive long-term growth potential against a backdrop of geopolitical necessity.
Exactly. This raises an important question for our listeners. How much value do you place on strategic dominance and domestic supply chain security compared to current earnings metrics? That's what you need to consider when looking at this critical minerals play.
Food for thought. If you enjoyed this analysis, make sure you hit that subscribe button to get our next episode delivered straight to you.